Ripple's native XRP token hit its highest point since late May when it tumbled to new lows below a multi-year trend line. Then it lifted nearly 50% since the lows in June, but it's not all sunshine and rainbows. It is still down 80% from its peak in April 21. What's worth noting is the impulsive price action we have been seeing in shorter time frames. Today, we will apply some good old Elliott wave rules to support our bullish take and to get some target measurements. Late November is what I'm now targeting for a top in XRP, so stay tuned until the end of the video for more details on how you could start a position to profit from this rally. Among major crypto assets, we see Bitcoin having lost two dynamic support lines and stands now at the mercy of another sell-off that could take it down to the 14K and even 10K pointed out by these two intersections on the chart. Visiting the chart of Ethereum, we meet a less deteriorated technical landscape. Here the asset has still managed to stay above the upper range of an ascending multi-year support area, but it could be in the process of carving a new material bottom. A break below 1200 could yield a quick-fire drop to the 700s. So the broad declines in the overall crypto market this week make this little rally in XRP all the more intriguing. Looking at the ratio chart between XRP and Bitcoin, we recognize this new phase of relative strength, with the ratio being liberated from the triangular area where it stayed for more than a year. On a similar note, XRP is printing a second consecutive large bullish candle on the ratio chart against Ethereum, having surpassed an important descending multi-year line. For us technicians, it should not come as a surprise. We know that XRP has a completely different chart structure than Bitcoin and Ethereum. XRP has never surpassed its all-time highs from 2017, and so the descending line from this very same high at $3.30 is a battlefield where bulls and bears still fight for supremacy. I expected to see a crypto-correlated price action slightly tilted to the downside, eventually bringing its price down to 21 cents by December this year, as highlighted by this support intersection. But the latest price action left behind a higher low and a new break above last week's high when the price faded at a descending intermediate resistance. Looking at the 4-hour level, we recognize an impulsive structure made of three advancing waves, where wave 3 is still in the making. This count expects the price of XRP to be moving towards the upside in a fifth subwave to complete wave 3 of a higher degree. From here, we can infer a corrective wave 4 that, accordingly to Elliott wave rules, can't print lower than the highest point of wave 1 of the same degree. The following and final wave 5 could start at the same level where wave 4 of a lesser degree started, as is often the case, and reach to new highs at 50 cents, where coincidentally two resistance lines intersect. By plotting the Fibonacci scale on top of this wave structure, the 1618 extension, usually taking as a measurement for the scope of the next impulsive wave, falls slightly short of the resistance line. The next significant Fib extension, the 2618, corresponds to the 58 cents, this time above our trendline targets. Nevertheless, we can see that the current price action is making a series of higher highs and higher lows following a Fibonacci structure without the usual overlaps that we find during corrective waves. This is quite positive for XRP and supports the case for new highs to be achieved. For a bullish trade setup, astute traders will probably wait for wave 4 to materialize and carve out a bottom around 29 cents by the end of September. Stops placed below the high of wave 1 of the higher degree at 36 cents could be then trailed along the ascending support. A target for this trade at 50 cents offers a risk to reward ratio of 3 to 1, that is a 30% gain for a 10% loss. So far, the analysis leads to the following conclusions. Based on the recent rally and its impulsiveness, bulls have something to hang their hats on. There could be a continuation towards the 50-cent handle, as we have outlined with a potential trade setup. The rapid squeeze higher that we are witnessing could be partly attributed to short covering, as sentiment is extremely negative in all major markets and sellers might get comfortable in placing higher bets. XRP is standing out among other crypto assets with its recent impulsive behavior, something that technical analysts will take as an omen for more signals of incipient short covering episodes to come. Stay tuned for future videos on crypto as well as legacy markets. Have a good one, guys. See you soon.